There's a lot of conflicting information in the trading space when it comes to trading news, and many will tell you to avoid it entirely. That's basically saying you might as well not trade at all. When I was learning, nobody shared advice with me on how I should trade around specific news events, which led me to second guess a lot of my decisions. Not only will I outline how to properly trade the news, I'll share with you a real life example how to predict the upcoming week so you're not left scratching your head when the dust settles. Now grab your notebooks and let's get into the video. Alright guys, so let's review a couple things when it comes to trading news. Now, every week is going to be a little bit different, and basically what we're trying to do, if you guys can see this image right here, we're really trying to learn how to basically fit a weekly template over our news calendar that's shown on Forex Factory. So basically learning how to trade news properly is like learning how to fit these shapes into this box. We have a specific weekly template that oftentimes can be very predictable as long as we have an expectation of how the week will form. Making predictions based on the calendar can help your growth as a trader because it will allow you to be fully prepared as the week evolves. Now, if you get it wrong, it's giving you a really great learning opportunity so you can understand if you see another week that has similar news events, you can basically assume that you might see certain conditions on certain days. Now, when it comes to my experience in the markets, I had to learn this over time, and I think I was very stubborn to it at first, was, when I'm trading FOMC weeks, basically, if there's a rate announcement plus a news conference, and there's not much going on early in the week, basically, I would just see all the time that everything was leading up to that news event. And this just came over lots of reps, lots of experience. So now when I come into FOMC weeks or NFP weeks, I'm fully prepared for that specific market condition. And this takes time. It takes time understanding the weekly templates, how to actually fit that prediction into the calendar. Like if you have a specific prediction and the calendar doesn't align with it, you're going to notice that a lot of the weekly profile templates are just not going to pan out how you would want them to. Now, I think an easy one to just go over, in my opinion, is FOMC weeks. And what you're going to notice a lot of times is that Monday and Tuesday are extremely choppy. And leading up to that event, there's no real direction. And when we get the real direction, usually comes after the event is over. So after that news conference is over, after the press conference is over, so we have a two-stage event. Not all of them are two-stage events. Some of them are just the rate announcement, and there's no press conference. Some of them, they don't announce a rate, and it's just meeting minutes, right? So we have to understand what type of event it is, and that really comes with experience. So I'm going to go over a couple different events, some that you should avoid, some that you can trade, and basically, how to plan for the week ahead. So a lot of this is going to be discretionary because coming into the week, we don't really know how it's going to trade, right? If we did, everybody would be a millionaire. But when we see the calendar ahead of time, we can kind of anticipate what days might be active, which days might set up as manipulation, et cetera, et cetera. And I'm going to go over a real life example of me actually predicting what was going to happen coming into the next week. So, or not coming into the next week, but leading up into the days where we had a specific news event. We have two different types of news events. We have news events that are tradable, and then basically we have news events that are not tradable. So all the news events that are not tradable, NFP, FOMC rate announcement, and CPI. Okay, so all three of these we're pretty much avoiding. And what you're going to notice is the days leading up to these events, you're going to get a lot of choppy price action. NFP weeks are notorious for running one direction and then retracing back towards like 50% equilibrium of the range prior to NFP. So what happens is, right, let's say we run lower and then run higher. Before NFP comes out, it's sitting in the middle of the range, and then we have stops resting above and below the market. So when NFP comes out, we don't really know which direction they're going to take. They could either run out the buy stops or run out the sell stops. So, and that's, you're going to notice over time, trading these NFP weeks ahead of this news event, a lot of times it's a gamble. A lot of times you're going to be stuck within a range. You're not going to get much out of it. But I will say that NFP weeks, you might get an early move in the week. So you might get an expansion on Monday or Tuesday running towards a specific target. Once we hit that target, it might just retrace back into the middle of the range. Now, these are all things that you have to anticipate ahead of time, but we have to understand the calendar to possibly anticipate this, okay? So on an NFP week, if we have a high impact event on, say, Monday or Tuesday, and it's not one of these, right? If we don't have CPI and then NFP, right? If we have CPI on Tuesday and NFP, we're almost doing nothing that week, okay? And unless you're going to try and be in and out, right? So in after CPI and then out before NFP, which, you know, it's giving you a tight window to trade within. So just understanding that this can be either a treasure map or a landmine. So each one of these events, right, we have to just analyze them separately for what they are. But when we're reviewing the full calendar, we have to understand, all right, which days are going to be tradable? Which days might we see manipulation leading up to a specific news event later on in the week, okay? And it's really going to help you filter out a lot of days where it might be manipulation against your bias. Because let's say if we have a weekly bias that's bullish or bearish, what I actually want to see early in the week is maybe a high or medium impact news event come out and go against my bias, because I want to be able to get in at a price that's favorable to my specific position or my my sentiment in the market. So if I'm bearish, I actually want to see the market trade higher on Monday or Tuesday. And if I see a quick expansion on a news event reaching up into a higher time frame level, I know I can possibly position myself leading up to that news event if it's a tradable event, okay? And I'm going to talk about in the real life example, you know, why I was able to predict what I was able to predict and be able to position myself in that specific trade. So then we have news events that are tradable. Okay, so this is medium impact news events. We have PMI, PPI, unemployment claims, consumer confidence, new home sales. There's a lot more red folder news events that are not these three. And I would say even years ago, before CPI was even really a hot topic, you could have traded CPI. It wasn't that big of a topic until recently. And these are just things that you have to adapt to as the market changes. It's only really been a hot topic recently because CPI and inflation are kind of, you know, that's what our economy's hinged upon, is can we get inflation under control? Right now, it doesn't seem like it. So the narrative behind CPI has changed in the recent years. It wasn't always this, I would say, important or as hot of a topic. But, you know, it is still a very hot, volatile event because inflation will have an effect on, you know, whether the Fed is going to either hike or cut rates. So we have to understand, you know, are some of these events tradable? So, you know, a lot of people ask, do I trade before the event or after the event? So the only time I'm trading before the news release is when the draw on liquidity is clear and manipulation has already occurred. If these two things do not happen, then I do nothing. Okay, so thinking algorithmically, our if-then statement. If we have not seen either of these, or if we don't get these conditions, then I'm not trading before the news release. Okay? If my draw on liquidity is not clear, right, and manipulation has not yet occurred, then I'm trading after the release. So things need to be aligned for you before the news release. Otherwise, you should not be in the position. Okay? If there's, you know, and this trading before the news release, let's say, when an easy way to tell when the manipulation has not yet occurred is if there's either a trend line or a liquidity pool that's very obvious. So there's equal lows above you or equal lows below you, or there's a massive inefficiency below you. Whatever the case is, if we haven't traded into like a premium or discount level before the news, then obviously we don't have a high probability setup. Okay, so let's say if I'm going long, and this is where we are before the news event. Let's just say we're here before the news event. Well, we have equal lows below us, so why would I go long before the news if we have equal lows below us? Let's say this is the Asian range and we haven't taken out the liquidity. Well, basically, that just means that, you know, this might be the news event and then the real move will happen. Okay, so understanding what we have in the marketplace as far as, you know, market conditions and market structure is going to be so important before you take a position in the market prior to news release. And, you know, again, in the example that I'm going to share with you guys, the manipulation had already occurred. It hit a high time frame level, so I was confident just going, placing my position before a high impact news release. Okay, if I don't get manipulation, then I'm not doing anything. Okay, and that's when really the release will cause the manipulation, maybe rate on liquidity, and then we're gonna get a possible area to position ourselves. So really, this should help clear things up because when we're looking at the calendar, it's like, oh, do I trade before or after? And it really depends on what the market is doing before the news release happens. Okay, so when we come to the markets, a lot of times the market will set up and manipulate 30 minutes prior to the news release. You're going to get a massive retracement going 30 minutes into the before the news release. That's when you possibly can know that the market will possibly expand in your direction after the news release hits. But these conditions only appear when manipulation has occurred, like when the market's already trading at a premium or discount, and then the news release is just going to send it to its final target or terminus. So again, a lot of this is going to be discretionary. So when you're looking at your calendar, just try and make a proper decision, like outlining a template, right, towards a specific calendar event, and then try and trade it. So I'm going to go over the specific news event that we had last week, and at the time of this recording, it's June 24th. So obviously last week, this is what I was really paying attention to, and I'm going to just remove Aussie and CAD because I was really only looking at the euro and the pound. So when I come to the markets every single Sunday, I'm sitting down and actually looking at what am I looking for, okay? What am I looking for? How do I think the week is going to pan out? And you can see when we don't have very much going on, right? Like when we're looking at this, right, we have a bank holiday on Wednesday. We have core retail sales, yes, on Tuesday. But then we have a lot of stuff going on towards the back half of the week, okay? So this is telling me that, right, the calendar is loaded towards the back half of the week. If it was front loaded, it'd be a different story. And when you're looking at like an NFP week or something, if it's front loaded, you might get an early run to your target on NFP weeks. So a Monday or Tuesday could just run to your target just based on if it's front loaded or back loaded. And when I'm looking at this calendar, okay, I actually had an idea in mind on the pound that we're going to possibly see manipulation Monday and Tuesday. And even Wednesday possibly, because Wednesday was a bank holiday. But we did have pound CPI. And when we get into the trade example, okay, we're just basically saying, all right, well, if the monetary policy rate and the bank rate for Bank of England is coming out Thursday, and we also have unemployment claims, this is telling me like this is the day that I possibly want to be active as long as the chart is setting up for it, okay? So as long as this chart is setting up for a possible late week expansion, right? And we have Monday and Tuesday doing what I want it to do, which is manipulating. So if it's going to go against my specific analysis, that's what I want to see. I want to see it go against my bias. I actually want to see it manipulate so I can position myself if I'm going to be trading before the news event. And then once the news event is released, then we get a quick expansion to our targets. Okay. So let's quickly dive over into the trade example, and I'm just going to walk you guys through step by step of what I saw, right, going into the news release and what the actual response was. All right, so this was the message that I sent over to my private Discord. We had our top asset to watch for tomorrow, right? You can check the date, 6/19 at 8:32 p.m. This is basically how I'm predicting the following day, the next day, right? I have DOL, which is our draw on liquidity, which is this buy side imbalance. Sorry if this image is a bit small. We had 7 a.m. bank rate, right? We had some people obviously watching this level, right? We had buy side liquidity already ran, a shift in market structure, and a retracement to a sell side imbalance. So before we had our bank rate, all of this was lining up in our favor. And this is how I can tell just based on looking at the calendar, right? If we hop over to our calendar, if the market is setting up for a run lower in the pound, right? And this was my expectation, was just basically bearish on the pound coming into the week because we had a really bearish close on the weekly. If I wanted to, I'll show you guys the actual weekly chart, what it looked like. We can rewind it if we need to. Let me just rewind this. This is what the candle looked like the previous week. So just coming into this week, I was already bearish on the pound, just based on this run above the previous high, and then we've taken out the low. So already coming into this week, right, when we look at the calendar, I'm already bearish on the pound. My only reasoning to try and trade these news events is try and anticipate what these days are going to do. Okay, so if we're not going to sell off on Tuesday, right, and let's say even if I took a loss on Tuesday, I would have been okay just reshorting it again prior to the news release, just because everything lined up in our favor. So when we hop over into this video, right, you can see that Monday, Tuesday, Wednesday was the bank holiday, but the bank holiday came up and tested the premium end of that fair value gap. Okay, and you can see the day. All right, this was the actual rate announcement day. This is actually Thursday live price action. So leading up into Thursday, right, we already had gotten all the signatures that we wanted. This was Wednesday. Okay, so leading up into this news event, I was already anticipating that we were going to see a lower pricing of the pound before the news release. So if we didn't get this manipulation, if we didn't get Monday, Tuesday, and Wednesday running higher, then I'm possibly not trading on Thursday, or I'm not going to be positioned before the news release. All right. So a lot of this is going to be discretionary decision making, and it's going to be trying to understand, how the week is forming before some of these news events occur. Okay. So as you can see, I'm writing out the daily has already retested the premium end of the fair value bearish fair value gap on Wednesday. So when it comes to our weekly profiles, right, I'm anticipating a Wednesday high of week. All right. So what we have here is external range liquidity was taken out. Right. So we had ERL down here. And then this right here is just internal range liquidity. So this internal range is our bearish fair value gap. Okay. And what I'm seeking is more external range liquidity down here. All right, so plotting out the weekly open. If I'm bearish on the week, what I want to actually see is this trade higher. Okay, and this is giving me my indication that I can possibly just expect to see lower prices on the pound before I can position myself before that news release. If we didn't get, let's say if the week opened and then trade lower, that's basically already canceling out my entire idea of me trading that specific week's news events. And I don't know why, but I was pointing to the time. I think we had 24 minutes after the rate announcement. Okay, so we had already moved away from this specific level. Just fast forward some of this. Okay, so and a couple things that I'm noting was the lower time frame. All right, so obviously, I'm circling down here. Sorry if you guys can't see this, but I'm circling Monday, Tuesday, Wednesday, right? This is all manipulation. Higher, higher, higher. This is all manipulation. So Tuesday, we had a high impact news release. Okay, we didn't get the rejection, and it just traded higher. So I'm anticipating, even more of a manipulation on the pound prior to the rate announcement. Because in my opinion, the rate announcement was the most important news event for the pound that specific week. So Wednesday, what do? We tested the daily premium end of that fair value gap, and we got a change in the state of delivery. Okay, so when we got this bearish fair value gap and rejected away from it, I'm basically entering short during Asia, okay? And this is ahead of the news event. I don't really care that, I'm entering not in a kill zone. That doesn't matter to me because everything else based on the daily time frame, if I go back, right? If we just remove this candle right here, just remove this one. The daily already printed the candle that I wanted to see. We already got a strong rejection on the daily. So what I did was I entered during Asia and put my stop towards the daily high. Okay. Yes, it would have been better if I got in on the change in state of delivery, but I wasn't paying attention to this day because it was a bank holiday. All right. So a lot of times, I'm trading off of daily charts, all right, and using a wider stop because the information that I'm getting is valid for a trade idea. Okay, so this is my trade that I took in Alpha Capital because they just started accepting US clients. So you can see that I'm basically just short. I shorted it during Asia. My stop was above the daily high, and I had targets much lower. Okay, so we just went over, what happened after the rate announcement, and then we had another 8:30 a.m. We had another 8:30 a.m. news release with unemployment claims and Philly Fed manufacturing index. But because I was so bearish on the week, I'm okay holding through these news events, right? Because these showed up on our list of tradable news events, right? And as long as our high time frame liquidity hasn't been met yet, that means I can still hold the trade. And as you can see, it's ran much further, and we are almost at the previous week's lows. So you guys just saw me walk through the trade that I took, based on this specific calendar, and it really comes down to you kind of understanding how the week is panning out. Can I get a specific trade on? Can I have a level that is logical for the market not to go to place my stop loss? All right, and then just being comfortable holding through the specific news events if you have the real draw on liquidity. If you don't have a proper draw on liquidity and you don't see the manipulation, then obviously we don't have a trade, okay? So again, we're coming back to this flow chart, right? We have to understand if the draw on liquidity is clear and if the manipulation has already occurred. So if you guys just saw in my trade example, both of those were clear. I had a clear draw on liquidity, which was the weekly fair value gap or the daily fair value gap, and then manipulation already occurred. So if both of these check out, that means I'm okay holding that specific trade for the actual news release. So I hope you guys found something useful. I know when I was coming up, trading news was pretty complicated. I didn't know when to be in the markets, when to be out of the markets. And I think if you guys just really try and absorb all the information that I'm sharing with you, and then going forward testing, trying to predict the markets ahead of time, how the market's going to manipulate prior to specific news events. And then when the week ends, go back through your calendar and really analyze and put the calendar events on your charts. That's something that I did for a long time, was take a snippet of the calendar, put it on your charts, and actually see how the market fluctuates throughout the week, right? If Monday or Tuesday or Wednesday you're going to consolidate, manipulate, whatever the case is, how is the market actually reacting to some of these macroeconomic news events? If you found this video useful, make sure you like, comment, and subscribe, and I'll see you guys in the next one.